Hey traders, Mike Sir here. Many traders, including my students, always ask me what's the best day trading strategy out there that can help them make consistent profits. So in this video, I'm going to share with you what that strategy is, how to trade it, and real life examples of trades that you can replicate on a daily basis. But before we jump in, don't forget to hit that subscribe button and ring the notification bell to stay updated on all things trading related. Now let's get started. There are so many day trading strategies out there, but there is specifically one strategy that is well suited for day trading stocks. Now that strategy is called gap trading. Every day, there are stocks that gap up or down prior to the stock market open, and these stock gaps refer to the sudden and significant price jump or drop in the stock price compared to the closing price from the previous trading day. Now, these gaps result in a visible break in the price chart, creating a gap between the high or the low of one trading day and the open of the next. Gaps can occur for various reasons, including company news releases, earnings report, economic data, or other significant market events that occurred while the stock market was closed. Or quite simply, there is an imbalance of buyers or sellers, and therefore this creates a price gap. Lastly, many stocks are available for pre-market trading, meaning that they can be traded prior to the stock market open. And perhaps this is why there are gap trading opportunities every single day when the stock market opens. Now, there are two simple stock gap trading strategies, each with its own characteristics that you can profit from. But before I share these stock gaps with you, I want to let you know that I've been trading these gap trading strategies with Trade the Pool. They are an online stock trading prop firm that funds stock traders and offers more than 12,000 stocks, ETFs, and even penny stocks for you to trade. You can choose to start trading with a small $20,000 account or trade up to a massive $260,000 account. Once you pass the evaluation phase, you get funded and get to keep up to 80% of the profits that you generate. As well, when you sign up to Trade the Pool, you get a free user account to some of the best trading tools in the world, including Trade Ideas, TrendSpider, Bookmap, TraderSync, and more. Click on the link in the description box below to sign up for a free 14-day trial account to see if you got what it takes to become a funded prop trader. All right, back to the video. The first type of gap that I want to share with you is what's called a gap fill. It's based on the idea that when a stock price experiences a gap either up or down, there's a tendency for the price to revert back to fill that gap sometime during the day, meaning that the price would go back to its closing price from the previous day. Now, we tend to employ this strategy, particularly when the stock price has risen or fallen for no particular reason, and therefore we expect the price to revert back to the pre-gap levels. Now, here's a detailed breakdown of the gap fill day trading strategy. On this chart here, you can see that the stock Uber has gapped up and went higher than the previous day close of $62.41. Now what we want to look for is a defined support level that would trigger us to go short this stock and look for the stock to head back to $62.41. Now you can see that $63 was a support level, and once the price fell below that, it immediately filled that gap and went down to $62.36. This is a perfect example of filling the gap trading strategy. Now, there are some tips that you can look for when trading a gap fill. One is to look at the overall market direction by monitoring the major stock market index, such as the S&P 500 if you're trading the US stock market. For example, if a stock gapped down for no reason and the S&P 500 index is trending strongly up, there's a higher chance that the stock will go back up and revert back to its pre-gap level from the day before. And vice versa, if a stock gapped up for no reason and the S&P 500 index was falling sharply. Another tip to consider is to look at the trading volume of the stock in the pre-market trading session, or once the stock starts trading. Now, if there is not a lot of trading volume behind the gap, meaning that there is not a lot of buyers or sellers pushing the price up or down. Now, for example, if the price gapped up 10% due to a small number of buyers who push up the price, then there's a high probability that the price will fall back down once the stock market starts trading. The second type of gap that I want to share with you is called gap and go. Now, the basic premise of this gap trading strategy is to take advantage of the momentum created by the gap, with the expectation that the price will continue moving in the same direction of the gap. So in this scenario, if the stock gaps up, then our expectations is that the stock price will continue to go higher, and vice versa if the stock price gaps down, and we would expect the stock price to continue heading lower. Now here's a detailed breakdown of the gap and go day trading strategy. On this chart here, we will use the same company, Uber. Now the company stock gapped down from its previous day close of $61.57. And what we want to look for is a defined support level that would trigger us to go short this stock and look for the stock to continue heading lower. You can see that $60.30 was a support level, and once the price fell below that, it continued to head lower, reaching a low of $58. Now this is a perfect example of the gap and go strategy. Now a few tips to look for when trading the gap and go strategy. One is it's preferable that there is a reason why the stock gapped up or down. Now perhaps some company news or earnings. This way the positive or negative news will continue to drive the price in the same gap direction. Another tip is, like filling the gap trading strategy, volume and market direction are important as well. Okay, now that you understand the two types of gap trading strategies, the question that you're going to ask me is, how do I find these stock gaps? Now there are a few tools that you can use. One is, if you're already using TradingView for your trading charts, they offer a stock screener that filters the top pre-market gappers for you. Now I generally like to only trade the stocks that are at least $5 and above, and volume at least 100,000 shares traded already. Now personally, I like to day trade NASDAQ listed trading stocks, so therefore I usually go to the NASDAQ.com website and look for the pre-market gappers on the site. In addition, there's software like Trade Ideas, which is a market scanning tool that can help you use to filter for gap trading strategies. Thanks for watching. If you like this video and want to learn more about how the top traders in the world trade, click on the videos on your left and also on your right. I'll see you guys all in the next video.